Do you think that Tesla stock will drop as low as $25? It is currently trading at 228.52 cents per share. While a $25 price tag may seem unlikely, a well-known Tesla bear says that given the company's current performance, it's highly likely that you shouldn't ignore this information. Elon Musk has stated that he plans to go full tilt and produce as many cars as possible, which should frighten the bull and be bad, not good. Real margins for Tesla, including the costs of those factories, are far lower than what the company is claiming. Based on this, I believe Tesla's stock is worth between $20 and $25. Johnson Gordon, the CEO and creator of Golgi Research, a professional services and independent publication company, is Gordon Johnson. The company finds exceptional value opportunities in a variety of industries and sectors and offers in-depth coverage of businesses in industries as diverse as steel, iron ore, and electric vehicles, cannabis, lithium-ion batteries, solar energy, and a lot more since starting coverage in 2008 before concentrating on the solar industry. Johnson, an equity research analyst with over 10 years of expertise, was recently listed by Bloomberg as one of the top stock pickers in the steel, iron ore, graphite electrode, electric car, and solar spaces. Johnson covered solar companies and semiconductor technology while working at Lehman Brothers. Numerous publications such as Bloomberg Barron's Forbes, the Wall Street Journal Reuters Feet Times, and TheStreet.com have honored Johnson for his precise stock selections. Regarding Tesla stock, Johnson is likewise regarded as the bear of all bears. In fact, Barron's, an American weekly magazine publication published by Dow Jones and Company, claims as much. In a recent interview with TD Ameritrade Network and over-the-top broadcast channel streaming financial news and education content, Gordon Johnson, CEO of GLG Research, discussed how Tesla shares tumbled after lowering EV prices in China, as well as the bear case for Tesla. He said that, arguing about the emerging competition in the EV market, Tesla's market share is still collapsing, and that they could even go flat to down in the March quarter. Johnson has been the most bearish analyst covering. Even after upping his company's pricing, Tesla bear sees the company falling from its current value. Mid-July targets for Tesla are 67 to 73. However, keep in mind that these are pre-split price objectives. Johnson's split-adjusted target price of 24.33 suggests a potential fall of up to 89% by the end of 2023. The good news in this department is that the gigafactories in Austin, Texas, and Berlin, Germany went online earlier this year. Ramping up output at these facilities should help Tesla maintain rapid EV delivery growth in the near term, but beyond a year or two from now, it's unclear how Tesla would continue adding to its quarterly production. Johnson has long had two major issues with Tesla. First, he doesn't think the company can justify its valuation without adding 100,000 new EVs on an incremental quarterly basis. Johnson is also concerned about Tesla's accounting methods, pointing out that billion-dollar stock-based pay for CEO Elon Musk is recorded under selling even if Tesla's production doesn't increase as quickly as most Wall Street analysts anticipate. The company's push towards recurring profitability would likely prevent it from falling anywhere near to $25 per share. If anything, production ramp-up potential at Berlin and Austin should allay near-term production, slow down fears, even before Tesla released its Q3 2022 financial report, which experts perceived to be disappointing. General and administrative SG and expenses SG can fluctuate widely from quarter to quarter, which Johnson believes is helping to obfuscate the true operating efficiency of the company. Put possible pressure on the top and bottom lines of the EV maker cities kept their sell rating on Tesla shares and stated in late September that although the stock has declined by more than 40% year to date, Tesla has been providing bearish traders with a lot of reasons to be optimistic. A bullish reversal may be imminent as the stock approaches the oversold territory. In essence, the electric automakers' lower than expected third quarter deliveries to investors have benefited the bears. According to investigations, Tesla delivered 343,000 vehicles this quarter, which was somewhat less than the 364,660 that experts had predicted. Analysts are still keeping an eye on Tesla's weakness in the hopes that it will persist amid a wider slowdown in the stock market. So we advise shorting Tesla Incorporated. I must admit that there has been a short-term collapse, as reported by Dominic Chu of CNN. There has been a noticeable decline in relative strength, and the momentum has obviously weakened. With more electric vehicles on the road, Tesla could remain at the forefront of that shift. Experts believe that as the world continues to work towards reducing its carbon footprint, supply chain issues and the food and energy crisis will once again be solved by innovation. Tesla, along with the rest of the stock market, has seen a great deal of volatility. In particular, CEO Elon Musk has had an eventful month, circling back to discussions regarding the purchase and ownership trip of social media ARK Investment CEO. Cathie Wood disagrees with Gordon Johnson's pessimistic outlook regarding Tesla. Oil prices have increased consumer demand for electric vehicles like Tesla, and we believe there's no stopping that, according to well-known Tesla bull Cathie Wood. Although it's difficult to argue with professional moneymakers on the stance they took on the company, analysts are considering services sales, insurance sales, and other paid services, like autonomous driving functions and software, as parts of an auto company. Trend Now Wood said the EV industry is a relatively young industry and non-linear growth patterns usually occur in new industries, a glimpse of which was seen in November 2021 for the first time. Elon Musk's distinct marketing style and the car software component of the business might persuade investors to approach Tesla from a different direction. Despite all of that, some bears seem to have kept an open mind about Tesla. One even stated that Tesla proved him wrong, saying that for a while he strongly believed that Tesla was purely an automotive company, but this is no longer the case, and that in fact Tesla proved it could make money from business segments outside of auto. Tesla's Gigafactory just rolled out its first car fresh off the conveyor belt in the German automotive capital Berlin, which might be another reason to keep an eye on Tesla as they gain popularity in Europe in Q2 2022. Tesla demonstrated that it is more than just an automotive firm. The company's automotive sectors have traditionally generated the majority of its sales and 100% of its gross profit. Some claim that calling Tesla an electric car company is the best way to sum it up, but that is far too simplistic. In reality, Tesla is a technology company and an iconic revolutionary brand that specializes in making the customer and user experience incredibly frictionless. Despite this, it seems that Gordon Johnson remains pessimistic about Tesla. It's worth noting that Johnson revealed in a tweet in 2021 that his father was a longtime executive at General Motors. Fans of Tesla quickly deduced that this was the cause of the analyst bearishness on Tesla. However, the next day, Johnson's tweet vanished from existence, and he withdrew the claim that his family adores General Motors. Regardless of the real reason Gordon Johnson is a Tesla bear, he believes that the stock will drop as low as $25 per share. I think Tesla is probably a $20 to $25 stock, he said, adding that subscribe to this channel for more Tesla stock content. Of course, people were quick to screenshot the aforementioned tweet and demonstrate the assertion that the internet is forever overall.